everybody, it's Chris here from Serene Education with the 4 majors in this update for the 1st of May 2013. Fantastic weather out here in Wales this morning. I hope it's the same wherever you guys are. We're going to go over the 4 majors with our FX8 template. Okay, you're in front of me on the daily. What's been happening? A bit of movement yesterday, which was good. Latter part of the day, we saw price taking us above this all-important area here at 38.2, which is my long-term Fib retracement on the monthly time frame. We've had a lot of consolidation here before. Euro has been stuck in some sort of a time warp. It has been moving sideways for a prolonged period of time. And to see price moving higher and getting above this area here constitutes to some really good momentum for price now to kick on to the upside. We do need to see price now finding support above the 38.2 now. We were above here not too long ago. However, we failed to see price actually taking opportunity and forging out enough support in order to bounce to the upside. I've got my yellow lines here, which are my weekly, monthly Fib retracements, and I've also taken the current high that we saw back in January of this year to the current low. And you can see the 23, the 38, the 50, the 61, and the 78.6, which is back to my 50% line back up here. So, like to get out of this bandwidth over here. Ideally, the longest you stay is above 38.2. Then intraday, we should be looking to target the upside. There's about 70 odd pips to the next level here at the 50% line. This consolidation area here, just above the 13.2190. So, having looking at our chart on the bottom right hand corner here, you can see we have mixed signals. The institution moving average, which is the most important one, is below most of them besides the weekly time frame. So we could target the weekly to the upside as our initial target if we're trading the daily upwards. So you can see how close the institution is over here on our weekly. It's back up towards that 50% line where we have a consolidation here. So where we are now to that area now, we're looking at roughly around about just short of 350 odd pips. So there's more than enough profit to the upside as long as we see price now finding support above the 38.2. Because if she continues to do so, guys, then we could target here, the 70 pip target to here to start with. To the next level, let's take it from 50 back up to that day one. So there's another 110 odd pips. And then from the 110 back up towards the one on the top here, we're looking at 160. So there's more than enough profit to be made here to this next level of 50%. And then obviously if we're trading this high going forward, then we're ultimately going to be testing the all-time high here, which is way up here at 13.714. So intraday, we want to see price now finding support above here. So RMO is looking fantastic. The RMO is positive across the whole board. ADX is also looking fantastic as well. And RSI is looking great as well. So we've got RSI. We've got a lot of these true momentum ones getting through. The only downside over here, bar the 5 and the 15 and the 4 hour, is we don't have the R squared with us, which is the most important one, because R squared really tells us that sentiment is moving. It's positive moving or negative. It's genuine sentiment, whether it's bearish or bullish, and we don't have it quite yet on the small time frame. So intraday, it'll be nice to see. There we go. Get my 4-hour alert candle, because on the 4-hour everything's nice and blue. But as I mentioned to you, going to the 4-hour, you can see a lot of consolidation now over the past couple of hours on this particular pair. As long as it maintains above 38.2, then we should look to see a nice bullish engulfing candle, a nice hourly close or some sort like that, and then target back up to the 50% line. So we're looking roughly where price is trading right now to that area, roughly bar the spread at least 60 odd pips. Okay, RMO is making higher highs, which is fantastic, and the MACD is doing exactly. The only thing with MACD is slightly consolidating now. Yeah, it hasn't made a high, and as long as it maintains above 38.2, then we should look to see MACD consolidate above here, and then when we get that kick, that confirmation come through, then we should see the kick to the upside. If we do break that, if we fail to find support above the 38.2 and we break lower, then look to see it consolidating here to the 38.2 mark. So it's got this little consolidated band. You can see prior resistance at this level in the past. If she continues to stay onto there, then ultimately that's going to be her safety net. She trades in this band over here, and there's always going to be opportunity for price to reattempt these highs here. So intraday, look for buying sentiment, get below the 38.2 here on the red, roughly around below the 13.09 mark, then we should be looking back towards that 1300 mark. On to sterling. This particular pair, we've seen slight movement, tentative movement to the upside. It's positive. Now you can quite clearly see we saw price breaking above this consolidation high here. This 23.6 is our monthly Fib retracement, and these yellow ones are my current high in December of last year to the current low. So similar to what we did with the euro, and you can quite clearly see prices move towards these areas here and use them as a nice yardstick. So the major one is the 23.6. We're above that, and we're also above the 15,300, guys. 15,300, a major support and resistance level on this particular pair. And if I just type it in here quickly so you guys can see, 15,300 has been an initial major support and resistance level for a long time. We're talking back to 2010. So if price is spending more time above that, then we should be looking for upside. If she gets below that again, then we should be looking for continuation to the downside. We've seen the RMO trading below the zero line, but just recently we've seen it crossing above, and in doing so she's been trading above that major support and resistance level. Excuse me, guys. MACD is also complementing her, which is great. The RMO bar the weekly and monthly is looking positive, which is great because it's telling us we are seeing a trend forging now. The moving averages, which is also the most important one, are monthly, weekly, and daily. As you can quite clearly see on the daily, still above price. However, intraday it's supporting price. On this particular time frame, we have the 20 and 50 below price, which is great. We're making higher swings, which is fantastic, and we have broken that 23.6, which is also a very, very good sign for bullishness. However, as you can quite clearly see, from that high in January to the low here that we saw in March, the 23.6 has been broken and the 38 has been broken, which is good because it's almost like a little barrier between the 15,300. Now it's got above it. You can see we've headed into the 50% line, which constitutes another prior consolidation area. We have to get above that as soon as possible in order to see any further bullish momentum. If not, we don't. Then we like to see price consolidating with back to the 38.2 being our first target. So where she's trading now to that next level, there's 53 or 56 pips. So there's still profit to be made intraday to the upside. It's got to be very aggressive because the closer we get to this level over here, there's less likely for people to be going full tilt. So they'll be edging up slowly and slowly and slowly. So if you're looking to trade long term, rather wait for a close above the 50% and then target that institution to the upside, which is another 170 odd pips away on the daily time frame. So for next week, it's going to be interesting because we're leading into non-farm payroll this weekend, end of week Friday. So if anything, you want to take quick profits to the upside. There is no markets. Well, the UK is the only market available today. The rest of Europe is pretty much dead and buried. They are all having a bank holiday today. It's 1st of May, so it's May Day. So French, the Germans, and the Italians are all off today. So in terms of liquidity, it'll be very interesting to see how much we get. There's no news close at home. Well, there's nationwide PMI figures coming out, and we have the manufacturing PMI results at 9:30. So that could be quite interesting for the US, for sterling. We're trading quite close. They're expecting a slightly higher figure, which is great. If it comes out higher than the 48.6 that they're expecting, expect the sterling to rally. And if we can get it close above that 50% going into the US session, which is where the market's open today, we have a lot of news out for the US data. If some of that comes out negative, it could spur sterling to head on towards those levels up here at the 61.8 going into non-farm payroll. Quickly on to US dollar Swiss franc. This pair very tentative over the past couple of days, moving higher then lower then moving higher, very, very indecisive. This line over here, the 23.6, is very important. That is my fib level from the all-time low here back in 2011 to the current high that we saw through June, July of 2012. And you can see where price is now trading in conjunction to that. So she's above it at the moment now. The institution moving average is also in this area. You can see the RMO pretty much negative bar the 5 minutes, and you can see the RMO figure top there all red besides the 5, and my RMO down the bottom here all negative. So I know straight away that the institution moving average bar the 5 minutes is above price, which is not really great. The fact that the institution on our daily is quite close to this 23.6, we're going to see a lot of hesitation. We did have a tweezer bottom recently at this level. Price moved higher, but failed to actually break the current swing, the highs here, and subsequently price failed, and we are back at this level again. So negativity. The RMO is still above the zero line, but the MACD is now pointing lower. So we are trading at the 23.6. I'd dearly like, if this is to be one of a negative sentiment building up near term, I'd like to see this 23.6 being above price. In fact, it's quite close. It's quite hesitant. We are going into non-farm payroll this week. The US dollar Swiss franc is heavily affected because of that. And we got some news this afternoon for the US market. It'll be interesting to see what happens. So for me, there's no trade on the US dollar Swiss franc until we actually are either trading below it, or we see a nice bullish engulfing candle and we're trading above. because then if we are, then I could look to potentially target back up towards these prior swing lows here to the upside, and my ultimate target being 955.90. If not, break below, then I could always look to target the current support and resistance level to the downside in the shape of the prior low here, the consolidation low, roughly around this area here, which is just short of 90.55 mark. So want to see either bullish or bearish. My RMO, you can quite clearly see after this highs here is getting slow, is starting to wane, fall off, but it's still nonetheless above the 0 line. Okay, just, and we are at the 23. So for me personally, there's no trade here on the US dollar Swiss franc today until I get a more genuine indication of where sentiment lies. Last pair of the day, US dollar Japanese yen. Huge move for the US dollar against the yen since September of last year, breaking these horizontal lines here on my Fib retracements from the 2007 highs to the 2011 lows. 23.6 being broken at the just short of the 8700 mark. Then the 38.2 mark was here at the 9400 mark, and then we had the major 50% here just short of the 100 mark on this particular pair, and the price really rallying into it, then moving back, breaking, moving really great. However, coming unstuck here, 2 attempts of these highs here has seen price failing to actually break and close higher and to actually build on that, and subsequently price has fallen, and it's falling back now to the price support and resistance levels here in the shape of the prior consolidation. You can quickly see we had a higher resistance high, pulled back, and then the continuation we had a support, and then price is trading literally at that level as we speak. Just looking at our charts at the bottom here, you can quickly see mixed signals on our bigger time frames. The institutions below price, however intraday the institutions above price. RMO also the same, complementing the actual institution moving average. You can see as price has been moving higher on a daily, there we go, making higher highs, the RMOs also dropped off significantly. MACD's also made an appearance and she's trading below, so it's showing that the sentiment's pulling back, which we clearly have seen over the past couple of days. So as it stands at the moment now, we are trading quite close to this major support and resistance level here again, which also constitutes the 50 period moving average. So if I go to my 4-hour time frame and I look at this time frame, you can see that my institution moving averages now is that 4-hour, there's that 50% line on my 4-hour chart. So there's another 72 minutes, just over an hour to go on this particular pair on the 4-hour time frame for the candle close. And you can see there's a lot of hesitation here. The last candle we had was a doji, so clear hesitation at this level. You can see quite clearly we had consolidation here, and that's a major resistance high I was talking about earlier. RMO, you can quite clearly see is negative, and the MACD is also negative. As we head into this institution moving average, you can see the MACD is forging out a smaller swing, so that we could see what we like to see now, if this is to be a genuine support and we could look to potentially trade the bounce, is we like to see a nice confirmation signal. Either a nice 4-hour bullish engulfing candle at this level here would constitute to that, and then we could be trading back towards this little swing low level, which is roughly just at the 98.37 mark, and then back towards these highs that we saw price coming from. So important. If this is to be a consolidation area here at the bottom, we do need to see a nice 4-hour candle, bullish engulfing 4-hour candle. At the moment now we have almost a doji formation happening at the moment, not a really clear signal. There we go, and you can see the doji here, and then we've got a nice bull candle moving up. So we get a nice if we get a morning star formation at this level here, then that will constitute a nice support being forged. Excuse me, I'm trying to find the right word. And once we do get that, then we can actually build on that. Morning star is a very strong candlestick formation but it's got to occur at a major support and resistance level. You can clearly see that price is trading into the support resistance level as we speak here at the 96.74 mark, okay, which is the institution moving average on my 4-hour. So I'll rather wait for the next 4-hour candle to close. If it closes higher than the prior low, then I'm looking to target upside here. 98.37 quickly to the upside would be a nice target. Where price is trading right now to this level, you're looking at 76. By the time it closes, hopefully it'll be same height as this prior candle low. Then we should be targeting that level intraday, because you can start seeing that there's more sentiment to the upside. You can see that the R squared is complementing. We should be looking at buying sentiment intraday. If that complements it, then we should be targeting the upside. The only thing that's going to cancel this out is if price fails to actually build on that momentum, we get a resistance level here being forged here, where price can't rally above this little swing low, and then we see price reattempting the downside. it's got to clearly break and close lower. You can see quite clearly what happened over here, for example, not too long ago. We had a major 4-hour candle drop. However, I can guarantee that a lot of people went into this naked in the market, but it failed to close lower. That's the reason why it's so important to rather wait. If you're trading major support and resistance levels, rather wait and give back a candle to the market. If it means giving you a 4-hour, an hourly, or whatever to the market, then do so, because then you're going to get a genuine sell signal. Here, the institution is still below price, so there was no reason why you should be selling into this area. Maybe an hour, yes, into here, but you'd be taking a lot of risk in this trade because of this closeness to this particular event. So you can see quite clearly here, for example, the institution is quite close. There's a lot of sentiment here. Rather give it back, get a nice juicy confirmation candle, and then trade the outcome. Okay, so that's it, guys. I hope you have a fantastic trading day. Please be aware, bank holiday here in Europe, except for sterling, for United Kingdom. So I don't know how much momentum we're going to see on the euro crosses, but we do have a lot of news out this afternoon for the US markets. Please be aware of it. Crude oil inventories, we have a lot of ADP non-farm employment change figures, manufacturing PMI, we have FOMC statement later, which is very important, the federal fund rates. There's a lot of stuff coming out for the US market later this afternoon, so very important to be aware of that. So we also have interest rates announcement for the US market later this afternoon. Okay, other than that, keep it safe, trade safely, follow the rules of the particular templates for Serene Education, back them up with sound money management, and I just mentioned it, keep it simple. Very you've got to keep it very simple and very mechanical. Okay, other than that, I'm going to leave you to it. Have a fantastic trading day, and I'll see you tomorrow morning. Trade serenely.